Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're tackling a company that really shook up the brokerage scene, Robinhood Markets.
Oh, yeah. Definitely a disruptor.
And the big question, well, lots of you are asking, is Robinhood a good time to buy right now?
It's the question on everyone's lips, it seems.
We've got a stack of analysis here, and our job today is to, cut through the hype, look at the real data, and help you figure out what actually matters if you're considering this stock.
Absolutely. It's a really interesting one. We'll be looking at that fast growth, but also weighing it against some pretty significant risks.
We'll get into the financials, their big plans for expansion, and of course how that stock price, stacks up valuation-wise.
Exactly. The goal is for you to walk away with a much clearer picture of Robinhood, what makes it tick, and what you really need to think about if it's potentially going into your portfolio.
Okay, before we jump in, though, just a quick reminder. If you find these discussions valuable, please do hit that subscribe button.
Give us a like, maybe leave a comment.
And hey, if you're feeling generous, consider buying us a coffee. It really helps us keep doing this work.
It absolutely does. Okay, Robinhood.
Let's get straight into it. The first thing that just leaps off the page from our analysis is this, incredible financial turnaround in 2024.
It is quite something. What's really striking is just how dramatic that swing was.
Yeah.
Robinhood saw revenue grow 56.30%, went from about $1.89 billion in 2023 up to nearly $2.95 billion in 2024.
Wow. That's huge growth.
It is. But even more impressive, maybe, is the bottom line. The company shifted from a net loss, remember they lost $541 million in 2023, to a pretty substantial net income of $1.411 billion in 2024.
Okay, hold on. From losing $500 million to making almost $1.5 billion profit in 1 year.
That's the number. It's a massive shift towards profitability, almost like flipping a switch.
That is just astonishing. And our sources seem to point to pretty strong operational efficiency behind that.
That's right. Their gross profit margin hit, get this, 88.07%.
88%.
Yep. And the net profit margin was 47.81%. Really strong numbers.
Okay, those are impressive margins.
And it wasn't just a one-off thing in 2024. The momentum carried into the first quarter of 2025. Revenue grew 50% year over year, hit $927 million.
And net income
jumped 114% to $336 million. So things are still looking pretty good on that front.
So the income statement looks fantastic. Top line growing, bottom line exploding, margins look great.
Yeah.
But what about the foundation, the balance sheet? Is it solid?
Well, they do have a solid amount of cash. They were holding $4.332 billion in cash and cash equivalents at the end of December 2024. That's a decent cushion.
Okay, that's good.
However, and this is where it gets, really interesting, the cash flow situation is a bit concerning.
Thus so.
They actually had negative operating cash flow, came in at minus $157 million for 2024.
Negative. Even with that huge profit.
Correct. And negative free cash flow, too, minus $170 million. So while they're reporting big profits, they were actually burning cash from operations.
That doesn't quite add up. Where's the cash going?
Likely reinvestment, acquisitions, things like that. It means they need that cash pile. The debt-to-equity ratio is okay at 0.94, sort of middle of the road, but definitely something to watch closely given the negative cash flow.
Right. Means monitoring. Okay, so it seems like Robinhood has really moved beyond just being the, commission-free trading app.
Oh, definitely. They've evolved quite a bit.
What are the key strategies driving this growth now and this turnaround?
Well, a big part of it is this push to become a much broader financial services platform, not just trading stocks.
Okay.
Key things here include global expansion. Look at the Bitstamp acquisition. That was $200 million.
Right, the crypto exchange.
Exactly. That gives them crypto infrastructure in over 50 international markets. That's a big move.
So leaning into crypto internationally. What else?
They're also diversifying the products heavily. Robinhood Gold, their subscription service, now has 3.2 million subscribers.
That's a solid subscriber base.
It is. And they keep adding features people want, like 24-hour trading, futures, options trading, things that appeal to more active users.
And it sounds like they're also deliberately going after a different type of customer now, not just beginners.
That's a really good point. Yes, they seem to be focusing much more on active traders.
Also,
they launched the Robinhood Legend desktop platform. It's specifically designed for, quote, sophisticated retail investors.
Sophisticated.
Yeah. So it signals a clear move beyond just the casual, maybe first-time investor. They want the people who trade more often, use more complex products.
Interesting. Growing up with their user base, maybe? Okay, let's shift gears. For a lot of you listening, the really crucial question is always valuation. Our
Always.
sources are flagging some pretty concerning multiples for Robinhood. So what does all this growth and strategy mean for the stock's current price? Is it just too expensive?
Well, look, the metrics definitely suggest it's trading at a significant premium. Let's put some numbers on it. The PE ratio, price to earnings, is 47.45.
Okay, 47, and compared to the industry.
That's substantially higher than typical industry averages. I mean, really high.
Right.
Then you've got the PS ratio, price to sales, at 24.83. Again, indicates a very premium price relative to the revenue they bring in.
And price to book?
PB ratio is 9.19. All these numbers together reflect really, really high expectations baked into the stock price by the market.
So how does that compare to, say, the established giants, like Schwab?
Yeah, good comparison. If you look at a company like Charles Schwab, massive scale, right?
Yeah.
10 trillion in client assets, much more diversified revenue. They trade at much more conservative multiples.
Okay.
Or Interactive Brokers, another strong performer, but again, their valuation metrics are generally more reasonable relative to their fundamentals. Robinhood stands out as being priced very richly.
That definitely sounds like a potential red flag. But the analysis also hinted that there might be something that partially justifies this premium.
This is the crux of the bull case, right? It's all about the growth story. While those valuation numbers are undeniably high, Robinhood is projected to grow its EPS earnings per share by 128% for 2025.
128% growth. Okay, that's huge.
It is. And remember that strong revenue expansion we talked about, the market sees that. Now, the forward PE, looking ahead, is still elevated at 60.98 times expected earnings.
Still very high.
Still very high, yes. But it reflects these massive growth expectations. The market is essentially betting that Robinhood can deliver on that incredible growth trajectory.
Got it. So paying a premium for potentially explosive growth. Let's talk about the stock chart itself. What's the technical picture telling us? What's the recent action been like?
Well, the stock's been on a tear, frankly. It hit an all-time high just recently, $85.55 on June 25th.
Wow, all-time high.
Yeah, shows really strong momentum. Right now, it's trading around $83.03, so still very close to those peak levels.
And what's driving that? Just hype.
What's interesting here is the volume. Our analysis shows strong trading volume during these rallies. That suggests it's not just retail frenzy. There's likely significant institutional buying happening, too.
Yeah.
Big players getting involved.
Okay, so maybe more than just hype. What are the technical indicators? Is it looking overbought up here?
Actually, no, not extremely. The RSI, the Relative Strength Index, is currently at 45.86.
Which means?
Which is pretty neutral. Usually above 70 is considered overbought, below 30 oversold. So 45 is kind of middling. No strong signal either way right now on momentum alone.
Okay, and trend?
The trend is clearly up. It's trading well above its 20-day, 50-day, and 200-day moving averages. That's a classic sign of a strong uptrend across different time frames.
I feel a butt coming.
Well, yeah. The stock is up 274% over the past year.
274%.
Right. After a run like that, even with good reason, you have to think there's potential for some consolidation, maybe a pullback just to digest those gains. It can't go up in a straight line forever.
Makes sense. So if there is a pullback, where might it find support? Where are the key levels investors should watch?
The analysis points to some initial support in the $75 to $78 range. That's the first area to watch.
Okay.
If that doesn't hold, there's stronger support identified down between $65 and $68.
So $65 to $68 is a more significant floor, potentially?
Potentially, yes. On the upside, there's not much resistance above the current levels, obviously, since it's near all-time highs. So if the momentum continues, there could be more room to run. But those support levels are key for risk management.
Got it. Okay, beyond the numbers and charts, what about positive news? Any recent events or upcoming catalysts that could keep fueling this stock?
Yeah, there are definitely some positive catalysts in the mix. Goldman Sachs, for instance, recently raised their price target on the stock to $91, up from $82, and they maintain their buy rating.
Okay, that's a bullish signal from a major firm.
Definitely. Plus, those strong Q1 2025 results we mentioned, they beat their earnings per share, the EPS expectations, by 13.5%. Another positive surprise.
Nice beat. What else?
The company's board also increased its share buyback program authorization up to $1.5 billion. They've already bought back $579 million worth.
Share buybacks usually support the stock price.
Generally, yes. It reduces the number of shares outstanding. And then there's product innovation. They've launched Robinhood strategies, Robinhood banking is coming, and they have this Cortex AI platform.
Ah, AI, of course.
Right. And a big driver lately has been the resurgence in crypto trading. Crypto revenues actually doubled year over year in Q1 2025, hitting $252 million.
Doubled. Wow. How much of their revenue is that now?
It represented 43% of their total transaction revenue in that quarter. So crypto is hugely important for them right now.
43% from crypto.
Oh.
Okay, that's significant. So the market seems to be rewarding these efforts. What's the overall feeling among Wall Street analysts?
Well, the consensus rating is still a moderate buy. Out of 21 analysts covering the stock, 12 rate it either buy or strong buy.
Moderate buy, that sounds okay, but not universally loved.
Exactly. And here's the interesting part. The average price target from those analysts is $68.88.
Wait, $68? But it's trading around $83 now.
Precisely. So while the rating is generally positive, the average analyst target actually suggests limited upside or even downside from where the stock is currently trading. It's a bit of a disconnect.
That is interesting. Analysts say buy, but their price targets are way below the current price.
Okay. What about looking ahead? What are the key things investors should watch for? Near term, medium term?
Good question. Near term, the big one is Q2 2025 earnings. That's expected in July.
What will people focus on there?
Definitely crypto trading volumes. Is that momentum continuing? Also, Robinhood Gold subscriber growth and any updates on that international expansion, particularly integrating Bitstamp?
Okay. Bitstamp integration for institutional crypto revenue. What else?
There's always chatter about potential S&P 500 inclusion. That would be a significant catalyst forcing index funds to buy the stock.
Right, the S&P bump, medium term. Medium term, say over the next year or two, focus is on continued international expansion, rolling out that Robinhood Legend platform in the UK and EU.
Okay.
Also, potential improvements or clarifications in crypto regulation could be a big deal for them, and the actual launch of Robinhood banking, which is planned for Q3 2025.
And longer term, thinking further out.
Long term, it's about deeper global market expansion. They've talked about an office in Singapore, eyeing Asia Pacific, growing institutional services beyond just retail, and really leveraging that Cortex AI platform across their business.
Lots of potential growth levers there. It sounds quite positive overall on the catalyst front. But every investment has risks.
Yeah.
We touched on cash flow and valuation. What are the other key risk factors people need to be really aware of?
Yeah, you absolutely have to weigh the risks. And there's several. Stock-specific risks, regulatory scrutiny is a big one.
We mentioned the Fing NRA settlement.
Right, that $26 million settlement is a reminder they operate in a highly regulated space and can face penalties. There's also concentration risk.
Crypto dependence.
Exactly. Heavy dependence on crypto trading volumes, which are notoriously volatile, and also just general retail trading activity. Plus, competition is heating up.
Schwab, Fidelity.
Yeah, the big established players aren't just sitting still, and they're finding user acquisition costs are rising as they try to keep growing. It gets more expensive to attract new customers.
Makes sense. What about risks beyond Robinhood itself? Market risks.
Definitely. Sector and macroeconomic risks are crucial here. Interest rate sensitivity is one. Fed policy changes impact markets, which impacts trading activity.
Higher rates might dampen speculation.
Could do, yeah. And their revenue is just very dependent on market volatility and overall market conditions. If markets are calm or falling, trading tends to slow down.
And the recession risk you mentioned.
Right, that JP Morgan estimate of a 60% chance of a global recession is a major headwind. Recessions typically hit retail trading hard.
Okay. Anything else?
Uncertainty around digital asset regulations globally is still a big question mark. And then back to valuation and market sensitivity.
The high multiples we discussed.
Yes, suggesting overvaluation risk. And that beta of 2.25 we mentioned.
Remind us what that means again.
It means the stock is theoretically 125% more volatile than the overall market. If the market goes up 1%, Robinhood tends to go up 2.25%. If the market drops 1%, Robinhood tends to drop 2.25%. It's a much wilder ride.
Wow. So high beta, high volatility.
Very high. Plus, there's always execution risk. They're trying to do a lot big international expansion, new product launches. There's risk they might stumble in executing those plans.
Okay, that's a comprehensive look at the risks. So we've covered the turnaround, the strategy, valuation, technicals, catalysts, and risks. Let's bring it all together. After digging into all this, what's the overall investment recommendation? Is Robinhood a good buy now?
Based on all the analysis, our overall rating comes out to a 7 out of 10.
7 out of 10. Okay.
And the recommended best entry price range is $65 to $75 per share.
65 to 75. Why that range specifically?
Well, that provides roughly a 15–20% margin of safety from the current trading levels, which helps mitigate that valuation risk.
Okay, it builds in a buffer.
Exactly. But it still allows you to participate in the potential growth story if it plays out. And importantly, that range aligns pretty well with those technical support levels we identified earlier. So it looks like a better risk-adjusted entry point.
That makes sense. A specific range based on support and valuation. Does this advice change depending on how long someone plans to invest? Long-term versus short-term?
Oh, absolutely. Your time horizon is critical here. For long-term investors, people thinking, say, 3 years or more out, the recommendation leans towards a strong BY.
Strong buy for long-term. Why?
Because over that time frame, they have the potential to really benefit from that global expansion, the product diversification coming online. Short-term bumps matter less, and they can participate in what might be a longer structural shift towards digital finance platforms like Robinhood.
Okay. What about short-term traders? Someone looking at, say, the next 3 to 12 months?
For them, it's quite different. It's more of a hold or maybe a weak BY.
Hold or weak buy. Why the caution?
Yeah, because of that high volatility we talked about. Yes, it creates trading opportunities, but it also massively increases the risk in the short term. The technical momentum is positive, yes, but it does look stretched after that huge run-up.
But there are near-term catalysts.
There are, like the upcoming earnings. So there is potential upside, but the risk-reward is less compelling for a short-term hold compared to a long-term view, especially at current prices.
Got it. So approach depends heavily on your time frame. Now, for the active traders listening, are there any specific trading guidelines suggested by the analysis, like stops or targets?
Yes. For those taking a more active approach, the analysis suggests a potential stop loss around $75.
$75. That's about 10% below current levels.
Roughly, yes. It helps manage the downside risk if the stock starts to break down from these high levels.
Okay. And profit targets on the upside?
The first take-profit target suggested is $95. And an extended target, if momentum really carries, could be around $105.
$95 and $105. What about position sizing, given the volatility?
Definitely need to be careful there. It's recommended to limit a position in Robinhood to maybe 2–3% of your total portfolio value because of that high beta and volatility. Don't bet the farm.
Prudent advice. Any other trading considerations?
Dollar cost averaging could be a strategy. Instead of buying all at once, maybe phase your entry over 3 to 6 months to average out your purchase price.
Smooths out the bumps.
Potentially. And overall portfolio allocation. Maybe 3–5% could be appropriate for a growth-focused portfolio that can handle the volatility.
And what should people keep monitoring closely?
Definitely the quarterly earnings reports. Any significant regulatory news, especially around crypto, and just keep an eye on crypto market trends in general, given how important that's become to their revenue.
Okay. Excellent practical guidance there. Wow, that was quite the journey through Robinhood markets.
It certainly covers a lot of ground.
We've seen this picture of a company with, frankly, incredible financial momentum recently, ambitious growth plans, especially pushing into crypto and international markets.
Huge potential there, for sure.
But, on the other hand, a stock trading at pretty eye-watering valuations, facing significant risks, regulatory, competitive, macroeconomic.
Yeah, the risks are definitely real and need to be respected.
So, ultimately, whether it's a good time to buy Robinhood now, it really seems to boil down to your personal investment horizon, doesn't it? And how much volatility you're comfortable sleeping with at night.
That sums it up pretty well. It's not a simple yes or no. This case really highlights just how dynamic this whole financial technology space is.
It really does.
And it raises a bigger question, perhaps. As these innovative platforms like Robinhood keep pushing boundaries and changing how traditional finance works, how do we as investors balance that?
Balance what?
Balance the undeniable excitement of potentially disruptive growth with those timeless principles of, fundamental value and managing risk.
Growth versus value and risk in the age of fintech.
Exactly. It's something important for all of you listening to think about as you consider your own investment decisions in this rapidly evolving landscape.
That's a great thought to leave our listeners with. Thank you for joining us on this exploration of Robinhood. We hope this analysis has given you some valuable insights.
Hope it was helpful.
Until next time, keep digging for those nuggets of knowledge.